In this video, we are going to cover the introduction to step 1, what is the market and who participates, along with part 1 of what is a market. So we as traders, we need to understand the market because quite simply, the market is our environment as a trader. We need to understand the environment that we are operating in as traders. In step 1, what we're going to cover, so step 1, first of all, we are going to cover what is a market. We're going to look at what are the key markets. We're going to look at the main participants in the Forex market. We're going to look at participants in the stock market. What are the market hours? What are the different FX trading sessions? We're also going to look at Forex in more detail, and we're going to look at a little bit of Forex history. So first of all, what is a market and how do we see a market? We see the market on a very simple two-dimensional chart. We see the y-axis, the vertical axis here with all the prices, and we see the x-axis, the horizontal axis with the time down here. And as we go through time, we move from left to right. Each one of these bars represents 4 hours, because we see here this is a 4-hour chart. We'll cover all this in a lot more detail later on. Each represents 4 hours, so every time 4 hours, the 4-hour candle closes, a new candle opens up, lasts for 4 hours before the next one for 4 hours, and so on and so on. We see the price of this is the pound against the dollar, so the pound has gone down against the dollar, it's gone up against the dollar, and gone back down. And on here we see at the bottom we've got the lowest price on this chart at 1.5091 and the high up here 1.5827. So what moves the price? Quite simply, price is moved on supply and demand. We have the supply, how much is going in, the demand, how much people are buying. It can be translated simply as buyers or sellers. In this market we have buyers and we have sellers. So if we go back to the chart here, we see here people are selling more pound against the USD, the US dollar, and they were buying more pound against the US dollar and then selling it more there. So if people are buying, what's going to happen is the price is going to go up. If the buyers are stronger than the sellers, the price will go up. If the sellers are stronger than the buyers, the price will go down. We see here in this market, this represents the sellers in the market, and this represents the buyers in this market, and they're always at that little fight, that push between one and other. So a lot of people say news affects the market, which is true, but it's indirectly, because what news does is news affects the participants of the market. If we take Apple for example, if Apple has a lot of good news come out, a lot of good data, this is what this is going to do. It's going to influence the participants within the market to buy. So it's the news that's great, say from Apple, that comes out and people hear this and then they start buying in the market. What directly affects the market is simply those buyers and sellers. So what we have here is, I'll bring this up. This is it's called a Bitcoin market. It's a cryptographic currency. The reason why I've chosen this is simply because it's low liquidity. And on the right here, you can see the buyers at the bottom and the sellers at the top live in this market. So you can see them coming out here. And in the middle, you have the price. We'll cover more of that in the next video. So we see sellers have come in, buyers have come in there. Now we've seen this market has come down here. There's a 5-minute chart, so each of these are 5-minute candles. And the sellers came in pushing this market down, and right now the buying and selling forces are quite equal. But what will move this up if it goes up is the buyers being stronger than the sellers, and the buyers eating up these. So we see here we're at 265.69, 262.783, and if the buyers come in, they eat up all these orders, these asking prices from the sellers, pushing the market up through this order book and pushing the price up as well. If the sellers were to come in, they'd sell to all these people looking to buy and push the price down. So you have this order book, the buyers, the bidding, and the sellers asking, the price in the middle. The buyers will come in if they're strong, eat up all these sell orders, and the sellers will come in if they're strong and sell to all these buyers, pushing the price of the market back down. In the next video, we are going to cover what is a market, part 2.